Hello guys, hope you are doing well today. Today the live seems very good. It's all green here. Now today I have just changed the time of the live at 8 o'clock. It was 10 and sometimes 11, and today it is at 8, and I will try to see if we have more guys are coming at 8. I will try to see, and then we can decide which time is good for you guys. Okay, so as you can see, today is Friday, and Friday is the end of the week, and the weekend there is no stock market. You can check forex and futures, but there is no stocks. Okay, now since 27 December 2018, okay, there is a big reverse, and at the time before the big reverse I say that we enter to a bear market, but after that there is a big change in the market, and the 26th December was the biggest day in 2008, okay, because we have a very big day, which was a very good day. In Dow Jones we have 1,000 points. It means $1,000 up in that day. It was miraculous. Now from that day the whole stock market begins to go up. From that day, the Friday when I did my live, I told you guys, if you can remember, if you go to my review of the week, and I say that it is a big reverse, and if it continues it can be a beginning of a trend. Now here is the deal. Each week on Friday when we have the live, I try to explain that it is strong, the market is strong, okay? But there are a lot of people who, in general, when I say something, they don't pay attention, although it is repeated. Now, if you can see the market from 26 December until now, you find a very big, strong trend, uptrend, and it was doing so good. So I will show the chart for you guys when we have enough people, and we begin to explain. Now, hello Jay. Hey Djellala, is the crash coming? Man. Hey Jay. Why you are thinking about crash? Why? What is the thing that shows you that there is a crash, or the crash is coming? How can you see in the future? I just say that from 26 December for 10 weeks. For 10 weeks. We have the strongest weeks since 2018, and you tell me there is a crash? Where do you see this crash? I don't see it. Okay? You want to you want to short the whole market? Okay, it's good. Listen, when the market begins to crash, you will see it. But for me, I don't see nothing. Okay? Hello, free trader. I don't see any market that, now if you want to sell short, there are stocks that are going down each day. So just search these stocks, and if you don't know how to search for them, I can give you a way to search for them, okay? And you can make a lot of money if you like to sell short, okay? So if you are doing day trading, it's okay to follow this kind of stocks. Hello, free trader. Hello, Luis E. Vidal. How are you? So, AJ, suppose that you want to short the whole market, and the market didn't go down for 1 year or 2 or 3 or 4 or 5. Are you going to wait until you become old? How old are you, AJ? 50? You will say 10 years or 12 years or 15 years until the market crash, and then you make money? No, it's not. Hello, Duna. How are you? Thank you very much for coming, Duna. You shouldn't do that, okay? You shouldn't do that, because try to seize the opportunities. If the market is going up, try to buy long. If the market is going down, try to short or sell short, or short sell ETFs, or so on. So in each mood of the market, you should do the same as the market. But the market is very strong all these weeks. Why should I go to wait for the short? I don't. Until I see some signs that shows me the market is weak and it can collapse. Duna said, today was a great day in the market. I know, Duna, did you short? Did you sell short today? I see most of the stocks go down today. Did you go to short? Let's go. You short Nike? Oh, okay. You did sell short also? Yes. If you are doing day trading, you just find stocks and you sell short, which is very good. Okay. Now let's go to. I will see what did happen to the stock market today. I see that it is down today, but I didn't check stocks. I check only my stocks. No, Nike, it has a gap down. Let me see. So Nike, it has a gap down. So from 88, it opens at 85. So $3. And from 85, it goes to 82. $3. It means nearly $6. $5.82. So so Duna, did you do a day trade? It means from the open, which is very good. You can make $1, $2, and $3, which is excellent if you are going to sell short. So this is, I think, this is earning news. Oh, it was earning news, yes, because I see a gap down. And most of the time, when we have all this gap, it should be either earning news or it is something else. But it's okay. It's okay. If it is and it seems to me today, Nike let's see let's say the 5 minutes. It opens 85.20, it goes to 85.90, and then it collapses, which is very, very good. And it collapses very, very good. It means it collapsed very, very good. See? Which is excellent. Yes. Which is very excellent. From 85 to 82, so it's $3. If you buy 100 shares, you get $300. If you are buying more, you can get more. Okay, that's the deal, which is very good. Now, Free Trader said, I shorted Met and Knock. Okay, let's see them. Oh, from 625 it goes to 596, 596, it goes to, oh, okay, but this trade is more difficult, than the other one, than Nike. And you say Met, $42, it was 43, it goes to 42, not that big deal. From 42 it goes to 41. So here, although it is a gap down, but it's not the same as the other one. It's not the same as the other one, which is very good. Now, yes, it's the best thing you can do in day trading is to find those earning news. It means when we have a gap up or gap down, and you can play, because in the earning news, stocks move fast because we have a lot of people, a lot of traders, and they buy a lot. The stock moves too fast, and it's always a good thing to make some money in earning news. Okay, it's better than the other days when you don't know, if there is like a big deal of movement, yes or no. But in earning news, you always have some stuff. Okay, but you could do also, when you see the news, you could do and follow the stock. You can make a lot of money also without being on the day itself. You can do when it is after hours or before hours. So for me, all my money I'm going long. Okay, so since I'm going long, I don't do selling short that much, because I don't like day trading. So all my money is in the market. So I didn't take some money and do some stuff. But it's very good to follow this kind of stocks if you are going to emphasize on day trading. Because in day trading, if you emphasize, you should practice a lot and follow the rules. If you have some strategies, you should follow them, and don't do big mistakes. Duna said, how can we determine when the earnings will be bad news or good news? Now, It's very, very fast. You don't have the time to follow the guys who in seconds they take a decision. Because who gives the information? It's the company. And the company, when the guy is speaking, he will give the number. The most important number that you can see is the EPS, which is earning per share. And this earning by share, you compare it with the analyst earning per share. If the company is better, you could expect a gap up. But here is the problem. It is the big traders who decide. Sometimes we have good news, but the stock go down. You will never understand why, but this is the game. So the most important thing, you can't catch these guys when they do. The first $5 or $6 or $7 that go up or down, you can't reach them. It's very hard. But you can if it continues to go down. Okay, I will just drink some coffee. I'm feeling sleepy. Hello, Wiseman. How are you? So, Duna, I will give you an explanation. Please watch, you guys. Okay. Just to give you the idea. I have explained this many times, but try to pay attention to my explanation. Now, let's say this is 4 p.m. and the people are waiting. Sometimes they don't say when. The company announcement, okay, the company, when it announces, sometimes it doesn't say. But let's say you should either see the company when exactly they will say, or you can see the news wherever you have as a news, if from your broker or from online or wherever. So sometimes they make an announcement, so you should listen. It means it is by voice. Okay. So this is the main thing. Sometimes it is you should listen by voice. Now, what is the most important thing? It is the analyst. It is the analyst EPS, earning per share. Let's say the earning per share is $2.50 for the analyst. Now, for you, what is your job? Your job is to know the company, what they say about the EPS. Because they will announce it and they will give a number. Because this is what we are waiting for. We are waiting for the EPS. So there is a comparison between the analysts, what they say. They say the consensus. It means what they agree on is $2.50. Now let's say the guy it says $3. It means it is more. Whenever he say $3, let's say the stock was 35. Now there are some people with big money, they are just waiting for the price. For example, they say it's 3, it's better than 250, so they buy. So from 35 it goes to 39 in less than 1 second. So it is too fast. It's too fast for you. But the good thing is when it continues to go up like this, let's say to 45, This is the big deal until 7:59. It means 8 o'clock p.m. So sometimes we have one direct line. You see it. This is the news when it comes, and where the people, they buy a lot. So it is so quick. It is so quick. And then we have people who are buying little by little, little by little. Let's say this from 35 to 39. Let's say we are in 4:45 p.m. And from 4:45 p.m. to 8 o'clock, it goes to $45. You can enter in this here, this small trend in the day. This is where you should enter and make money. Sometimes it is too much. Sometimes it is little. It depends. But this here, it's very hard. It's very hard. And sometimes we have good news and the stock, they go down. So there is no rule. Why there is no rule? Because you are dealing with people. You are not dealing with science. These are the people who buy. These are the people who sell. So it is not a rule for them to say, the APS is $3. Why the stock goes down? You say, why? You can't ask this question, because if the people go down, it means they want to go down. So you should follow them. So you should follow the price in general. Okay? But this sometimes here, sometimes it is very easy, sometimes it is very difficult. So what is the main thing for you guys? What is the main thing, like Duna, the others who are interested in news? The only thing you do is you practice. You practice, you practice, you practice until you feel the people who are inside this stock. You should follow the price. Don't follow the information. Because as I told you, sometimes sometimes you see that good news, but the stock goes down. I have seen it in Facebook before. And I was astonished. Why? It means you see the earnings are good, they are better than analysts, but the stock has been going down for $2 to $3. We don't understand why. It's just because we have, it's like a democracy. But a democracy where the big guys dictates the trend. It's the big guys with big money. They dictate. Because if you go against them, they will crush you. Okay? So you should be with the trend, with what the majority of the people has decided. Not at what you think the stock should be. Or you ask them, no, the stock should be going up because the earnings is good. You can't try to struggle with the price and with people. You should never do that. You should do what the market is doing. If the market is going up, you go up. If it's going down, you go down. Don't try to understand anything, because it's people who are trading, and there is no one to talk to. It's just the price. Muddy Dirt say, if it goes down and bounces off support line on good news, good time to buy. We never know. You should see the stock when it goes, what is the news, and then you can decide. Because there is no, in the earning news, there is no rule. The rule is the price. For me, whenever I want to trade, I don't believe whatever the people are saying online. I don't believe in the people, what they are saying. I believe in the price, because the price doesn't lie. When you see the stock is going down, if you tell me that the earning news are good, I don't care. I should sell short. I sell short what I see. I don't do because of the reasons. I don't believe in the reasons, because the reasons doesn't show you where the price is going. It's the price who will show you where things are going. Okay? And you have seen before with what happened last year to Google, to Facebook and Twitter. They have gone down so much. Facebook has gone 44 points in that 2 hours or 3 hours. So if you don't sell short, or if you don't exit, you will have a very big loss. Okay? Now, as I told you before, if you are yes, stop loss. Stop loss is during the day, but it doesn't work after hours. Okay, it doesn't work because after hours nothing works. If you want to exit, you exit. Okay, but there is no what we call stop loss after market hours. There is no, or before market hours. So if you are thinking about day trading, yes, in the day where the market is open, yes, you can do stop loss, you can do whatever, but after the market close, there is nothing that can help you. You should either stay or exit. That's it. So, as I told you before, I was just speaking how the market was so good in this 10 weeks, and just this guy who is AJ, and he told me the market is crashing. I am long and he's going short, and he's waiting until the market crashes, and then he sells short or whatever he wants to do. Now, if you want to sell short, you should do day trading. Each day there are opportunities to sell short, earning news, and almost the stocks they go down in some part of the week. So you just wait for that day and you sell short with the other guys. But in day trading, it's quicker and it's lighter, and you can do whatever you want to do. You go long, you sell short. You can even change the direction as many times as you like, depending on the stock. You can go long in one stock and you go short in the other one. Okay? Because the stocks are not the same, and they don't follow they follow the same rhythm or the same mood. But in general, if you see, most of the time I follow the indexes. For example, Dow Jones, you will see that most of the stocks follow the index. If it is down, you find that most of the stocks are down. Few stocks are going up. So it's very easy to decide which stock you buy or which stock you sell. Duna says, what is your opinion on shorting stocks that are overbought? Listen, what do you mean by overbought? What does it mean, overbought? Overbought is it is used with some indicators. I think RSI, overbought and oversold. This I don't see anything in it. I don't. If you are looking for the trend, yes. If you see a very, very long trend and you are waiting until this trend collapses and there is a reverse, yes. But overbought and oversold, no. No, I don't believe in these words. Even these words, I don't believe in them. I believe, for me, I follow trends. It's very easy to say, like an uptrend that dries up. It's better to say like this than to say overbought or oversold. How do you know that it is overbought or oversold? How? There are trends that say 1 year and a half. How do you know that it is 1 month or 6 months or 1 year? How? And who tells you that, who tells you that there are overbought? Who? It is just calculations based on other kind of stocks. And when it reaches 50% or 100%, they say, oh, it's overbought, it will fall. Some stocks, no. Some stocks, they go 100%, 200%, 300%, and they are still going up. They don't go down. Until the guys stop buying, which is the end of the trend. When the trend dries up, it begins to fall. When it falls, there is a reverse. Okay? This is the reverse. And you can take advantage of this reverse. You can do day trading each day. Or you can even sell short from the beginning of the trend, downtrend, and you leave it. Now I will give you just an example, just an example of how it works. Okay, so there are some trends like this. Okay, it depends on how much the trend has gone. There is no rule. You can't quantify the trend. For example, the length. Okay, the length, or one which is the length. Let's say 5 months, and 2. The percentage. So all these are variables. They are called variables. Although I don't know very much about math, but I know these variables. They change. Percentage. Let's say this stock goes 100%. But these variables, it's not a rule. It's not a rule. The stock can collapse at 30% or 50%, 200%. It can collapse at 1 month, 6 months, 1 year, 2 years. Now, when the stock stop going up, it will begin to collapse. Okay? As it goes up, it goes down. But going down is faster. Going down faster because we have two actions. We have people who are selling off, investors selling off, and two, we have sellers, short sellers. So we have two actions. They are selling other shares of other people. So that's why it's quick. It goes quick. So if you want to make money, it's better to do selling short on stocks. Try to avoid, when you are doing selling short, avoid earning news. Never sell short and in the earning news. This stock can be here, but next day it can be here because of earning news. So be careful of this earning news when you are selling short. So how do you know that this stock is overbought or oversold? You will never know, because no one knows when the trend will stop. No one knows how much percentage you will get. No one knows. This is about the future, about the people who are buying and still buying. So for me, I don't rely on percentage. I don't rely on the length. I don't rely on variables because they are not reliable. They are not reliable. For me, if the trend is going up, I'm still there. I don't care how long it goes. It can go 1 month, 2 months, 6 months, 8 months, 1 year. I will stay until the trend stops giving money. Okay? Now, when it stops giving money and it begins to collapse, it's high time to leave the stock. Okay? So that's generally what I do always when I am like when I'm following the trend. So it's very easy to know. There are some specific techniques that if you use, you will know 99.99 if the trend is no more going to go up. Okay. So Duna said, thank you, teacher, for your opinion. Thank you very much, Duna. Duna said, I respect your opinion. However, stocks don't move in a straight line. So you say, I respect your opinion. However, stocks don't move in a straight line. Who said, Duna? Did I draw a straight line or did I draw a zigzag line? What did I draw? Okay, I will show you. Duna, don't tell me that you have glasses also. Okay, I have glasses, but don't tell me you have glasses also. Let's go back. Now look here, look here, look here, look here, look here, look here. Do you see corrections? Do you see corrections? So I didn't say, I have never said that the stock will go like this. Each day it's going up. This is impossible. That's why I make my trend like this. So maybe even the downtrend, you see the downtrend? It can go up a little bit, yes, like this. It can go up. 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 So there is no straight line. There is no straight line in trends. It will never happen like this, okay? But there are some that are excellent, that are some which is very troubled, but almost of the trends are different. That's why there is no pattern. That's why I don't do patterns in trends. Duna said there are short-term corrections. Yes. Always there are corrections. It could be 1 day, it could be 2 days, it could be 10 days, 5 days, it could be anything. But the problem is that, is the trend continue to go up, yes or no? This is what's the most important thing you can think about. Nino 888, trend is your friend until it bends at the end. Yes. So the trend until it bends, for me, I say until it stops. It dries up. It has no highs anymore. The people are tired, and so the people will stop. And when they stop, they go back. Okay, or they go down. It's like going to a mountain. You are going up for many days, many weeks, many months, and then when you go to the peak, there is nowhere you can go. Okay, except for the people who want to do suicide, they throw themselves. But since it's not the case, the people will go back very quickly, because when you go down, you go quicker than when you go up. Okay, so thank you very much, Nino888. And Modi Dirt say peaks and valleys. Yes, peaks and valleys, and I don't know what is it, hollows, and a lot of stuff, you know, in the mountain. it's a lot of stuff. But the main thing is we have an uptrend and a downtrend. And there is no market that stays an uptrend forever. There is no market that goes down forever, except for stocks that lose business and they go bankrupt. And I told you before a story. I taught one guy. He has some ideas about investing, but he doesn't pay attention to something very important, which is the company health. So he bought two stocks. One stock, $250,000. He has $500,000. Now, what did he do? He bought two stocks. So two stocks in terms of portfolio is false. Now, why it is false is because the risk is too much. You can make a lot of money if these two stocks have been doing so good. You can make a lot of money. But the problem is that if one or both they do bad, you will lose a lot of money. And this is the problem. Now, this guy, when I was teaching him and I told him, do you have any investment? He told me yes. He invested through the bank and he has two stocks. And whenever he told me he invested through the bank, I say, how do you invest through the bank? He told me, oh, I put money out. I say, this is a bad choice. Now, I told him, I will tell you some information. Hello, Robert Tijon, how are you? What did he say? Robert, hello teacher, I am happy because the Apple stocks give me a lot of money. Yes, man, we have been riding this stock since end of December. That time I bought Apple. But I tell people, okay, it's an opportunity to buy, but they don't buy. They wait 1 week, 2 weeks, 5 weeks, 7 weeks, 10 weeks, 2 months, 3 months, 6 months, 1 year, 2 years, and then they say, oh, Apple has a good trend. I wasn't there. No, you were there, but you don't buy. So this is, I think most of my subscribers, all of them, they know about Apple and Facebook and other stocks. But the problem, they buy or they don't. And I give always recommendations for it is good or it is not good. But I don't ask people to buy or not to buy. It's their decision. Okay? So let me finish the story of this guy. I taught like many years. So drink some coffee. He bought two stocks. I think one is Amazon. No, I think it's Google. Google at that time was $500. So after a few years, it goes to 1,000. So he doubled his money, which is a very good investment. But the other stock that he bought, he lost it. Why? Because the stock was going down he didn't check what is the problem for this stock. It was going down, going down, going down for 1 month, 6 months, 1 year, 2 years, 3 years, until one day he opens his account. He doesn't find that stock. He finds only Google. Now he called his broker. Oh, you say you don't know? He said, no, I don't know. What did happen? He said to him that your company has gone bankrupt. So he was so sad. It's $250,000. It's a lot of money. Maybe, I don't know how many years, 10 years or 20 years, he's putting money in that stock. That's why I told you, whenever you want to do something like investing, you should know the characteristics of investing, what is important and what is not important, and pay attention to the price very, very much. For me, without going to fundamentals, I'm telling you from now, without going to fundamentals, I know the stock if it is strong or not. A stock that it is going up will never go bankrupt. Okay? Bankruptcy means that the mutual funds are selling for a long time. They don't sell for 1 day or 2 days or 1 week and then we have bankruptcy. No. The company stays many years into difficulties and then it borrows a lot of money and then it can't pay the interest rate for these loans. So it can't operate, and when it is selling little. So it is a very bad company losing money and have a lot of debt. It's like Rite Aid and other kind of companies. It's just because of bad management and the strategies of this company is so bad. Okay? So I tell him it's okay because you don't know. In the future you will be knowing more. And I ask him the question about using the bank. I say, why do you use the bank? Because banks have a lot of fees. And I begin to explain to him about 15 minutes what he should do with the bank. He should ask them how much they are taking, and he should check his account. When he put the money, they send the money, and he should see the difference when they bought stocks. And then he knows that the bank is ripping him off for many years. Let's say you put $100 and your bank take $20 or $25. How can you invest like that? It means you think that you have invested $100, but in the real, you did invest only 80 or 75, and all this money has been taken by the bank as fees. But I don't know what is this fees. They create fees that doesn't exist. Because in the stock market, when you want to buy a stock, you pay commission, $5. That's it. What you buy, what you pay. Okay. So you don't pay $20, $25, or $30 for what you put. Okay. So this is one of the biggest problems that people they have when they use like banks and other stuff. Now we have another question from Wiseman. Said it's 4 or 5 positions or more best for portfolio. Now portfolio depends. It depends on your vision in the future. The more positions you have, the less risk you have. This is the rule. Okay? The rule is the more positions, the less risk. Now, it depends on you if you are going to put more money or to stop, because people, they don't understand really investing. Investing, it is a habit. It is not you invest $10,000 one time and then you sleep for 10 years. This is not investing. Okay? If you want to make a big portfolio, $200,000, $500,000, $1 million, you should work the whole life. You should put money, have good stocks that you see that are good, and you put money all over the years. You don't stop. Especially those, even if you put $100 or $50 or $200, it doesn't matter. The main thing is you keep putting money and buying more shares. Whatever stocks you have 10 stocks, 20 stocks, 50 stocks, whatever you have. But these stocks should be grow more and more. For example, this year, you bought 50 shares of Facebook, for example. And you want to keep Facebook for many years. So next year you should buy 50 shares or 100 shares, the other year, until you begin to make big positions in a big portfolio. This is how you invest. You don't rely on 5,000. You think that 5,000 is too much, and you just put them, you buy some shares, and then you sleep for 50 years, and you think you can make $1 million. You can't. No one has done this, and no one will succeed with this. That's why people who invest, you should invest all your life. Make a plan. How much money you should put each year. How the growth will be. Because you don't know the growth, for example, how much percentage your stock will do. Okay? This is okay because no one knows. But you can control how much you put to make your account bigger and bigger. Okay? So I will give you just an example. Before I will answer other questions, I will just show you this kind of explanation. Okay? So, let's say this year, this is your account, and you divide your account into many positions. Let's say you have 10K this year, 2019. Let's say you have 1, 2, 3, 4, 5. Let's say you have 6 stocks. Now, these 6 stocks, let's say we put them, no, we put them 5, it's better. At least you will have a, let's say each stock you will have $2,000. Okay, $2,000. So this is 10,000. XYZ, ZYX, XZY, OFT, OMS, fictitious stocks. Now, you should plan. Are you going, let's say, to put more into these stocks? Or are you going to buy 6, 7, 8, 9 other stocks for next year? Are you going to stop putting more shares to these, or are you going to buy more? Now, if you buy, for example, you have 10 and you want to stop having other stocks, so you can add shares each year to each, whenever you have paychecks or you have the tax return or whatever you have. You should put money in all these stocks. You buy more shares equally, okay? Equally, it means the same amount of money. 2,000, 2,000, 2,000, 2,000. Let's say you want to add $500. $500 and you divide by what is the price of this stock, okay, and you add shares, and this, it go to 35 or 45 years in order to make an excellent profile, excellent portfolio. And these stocks will be becoming bigger and bigger and bigger and bigger and bigger, and your portfolio from 10,000 in few years it becomes 100,000. In other years it becomes 500,000. Then you will have $1 million. You can do that if you have a big plan and you stick to the plan. You stick to it, because when you want to add money, you will know how much you add, and you can control what you put. Now the growth of how your account will be, this is you can't control. You can't control because you don't know. Okay? So this is just an example of how to make the plan, but it needs a lot of reflection because it should be a plan of the whole life. So you should make sure you understand every step from these steps. Okay? So it's not an easy job. It needs a lot of work, a lot of work to find the stocks, a lot of work to make a plan, and a lot of work to be disciplined. It's not this year you put money, next year you don't put, the other years you take money from your account. This is not a good plan. So you are playing. Okay? Now let's see what the other guys are saying. Wiseman said, even though I don't follow TV, one guy on TV strictly recommends 5 positions for portfolio. Now listen, Wiseman, listen. 5 positions for how much money? Okay? Warren Buffett has, I think, 49 stocks or 50. Okay? So, number of stocks depends on the risk that you want to take. This is the rule. I have told you the rule. I will write it for you guys. The more stocks, the less risk. If you don't want to risk, you can make a portfolio of 25 or 30 or 40 stocks, depending on how much money you have. But this 25 stocks, you are not going to sell them all and buy other. No, you should keep them for many years and add more money. Okay, this is what you are going to do. But there is no one who tells you how many. It depends on the risk you have. 5 stocks. Okay. If you have $1 million, you put 5 stocks. Here, you are having more risk. More risk. Because if a stock is going down by 50%, or 2 stocks or 3 stocks, you will end up losing a lot of money. Okay? So don't follow people. Follow your own risk. Because this guy who said 5 stocks, you can tell him why. He should give you the risk factor. Why 5 stocks? And stocks, I'm telling you another thing about stocks. Technology stocks or drug stocks are very volatile. If you put all your money into these stocks, your account, either it will be very good or excellent, or it could be very bad and you lose a lot of money. So it depends. It depends where you are going to put your money into stocks. So don't follow people what they say. Follow your own risk. If you don't want to be frustrated, put more stocks. Because the more you put stocks, the less risk you have. One, it goes 20%, the other it goes 15 down percent. One, it goes up 5%, the other it goes 10%. So you will have a lot of mixture, and at the end, your account will be less volatile. But if you put 5 stocks that are technology stocks, drug stocks, believe me, you can see a lot of volatility in your account. Okay? It could be too bad. If you use all technology stocks, and technology stocks, all the sector go down, what does it mean? It means you will suffer and all your money will be gone. A high percentage. So don't play this play and just do what other people tell you to do. You should never accept any advice from any person. You should decide, understand how are you going to invest. Take a training, understand very well, and then do what you believe in. Don't follow any person. Okay? This is what I am telling you as the thing. Okay. Now let's see what the other guys are selling. Incognito, Papito, what do you think about NBVE right now? Is it a hold if you got it at 560? I think someone has asked me last week about this NBVE. NBEV. I think someone has told me about this. So, Incognito, Papito. So I will answer your question. Please be focused. He said, what do you think about NBEV right now? Is it a hold if you got it at 5.60? It's at 508, but it's known to spike. Okay? I find myself hesitant to sell even when the price is up by 5 or 10%. Okay. So it is a hold at 560. Let's go to this stock. NBEV. NBEV. Let's look at this stock. Listen, man, I don't understand what you are doing. Listen, Papito. Papito, look at the chart. Where the stock has been. It has been at 580 here. $580. Now it is 508. Okay. Now, where do you see it spikes? Where? You see it here and here? And you think that the stock will follow what you hope? I don't understand, man, what you are doing. Are you selling short or are you going long? So, listen. I don't know where did you buy, when did you buy this stock, but as you can see, it's going into a downtrend. This stock is an IPO. It means a new company. Okay, it's a new company, and the beginning was little good, but right now it is too bad. Let me show you. Oh, no, I'm sorry. I have been doing 5 minutes. No, I'm sorry. Oh, no, I'm sorry. I have been doing 5 minutes. Okay. Now, you look at this here. This is pump and dump scheme. Because I have been doing 5 minutes now, it's daily. This is a pump dump scheme. It means it's fraud. Some people push it up, they put it down. Push it up, they put it down. Okay? And you think, you said that, are you going to hold? Are you going to hold or to sell or whatever? Now, for me, I don't know what is your strategy. I don't know when do you buy it, or what are you expecting from this stock. Okay? So I don't know. You say it is a hold or it is a... For me, listen. For me, I buy like this. I buy the trend. Okay? But I will never buy the downtrend. Now you have been buying the downtrend. You have not buying the uptrend. You see the difference? People, they buy when things are going up. You buy when things are going down. So you are wrong. When did you buy this stock? It means at what price? And you say, I find myself hesitant to sell even when the price is up by 5 or 10%. I don't know what you are doing. And you say, is it a hold if you got it at 560? Now, 560, listen. From 560, it goes to 508. Okay? Try to see how much percentage you have lost. And here you say, I find myself hesitant to sell even when the price is up 5 or 10. How can you lose a high percentage and you want to make a little percentage? How is that? How do you make money from stocks if you do that? It means you stay when the stock is against you, you stay too much and you lose a lot of money. And then when the stock goes a little bit, you sell. Tell me, how do you make money in the stock market? You will never make money like this. So you should know what you are doing first. You should make a plan. Where to buy, where to exit, and not to leave the stock like this, okay? So, let's go back. Cloud with Twitter account. Hi Kareem, how are you? Adam? He said, is today sell-off indicators for something? We have to wait and see the upcoming days to know. Yes, when you say sell-off, for which stock? Which stock or which indicator or what? And I told you that for me, I don't use indicators. I don't know, I don't use them, I don't play with them, and they are out of my strategies. So you should tell me which stock or which index are you talking about when you say it is a sell-off? Okay? So I don't know. You should tell me first. A Trump 3 high. What happened to Domino's Pizza? The stock went from 1 to 300 just in years. I love stocks like this. Domino's Pizza. Let's see. Maybe you are speaking years ago. Here it is 424. I don't see the dollar, but I see 424. It goes to 305.34, and this year it opens at 245. It goes 297, and then it goes down. Okay, yes, but listen, I will tell you something. Trump. The problem in stock market, we don't trend the past. We don't trade the past. Okay? But for me, when Facebook was 1999, I make a video and I say it's time to buy. But no one, few guys maybe have bought, but most of the guys they didn't buy. Now, when you see an opportunity, you should buy. Okay? But no one knows the future. This is the problem. If I know, or you know, or anyone know for exact 100% what will happen to stocks, you will be billionaires in a few months. Because you will know everything about the market, and you just choose the stocks that go 500%, 1000% in a few days. But the problem is that if I bring you Domino's Pizza in the last years, you will never buy. You will never buy because you don't see the good things. But the good things are seen after many years. This is when you invest in a stock. Okay? So the people who believe in the company and they bought it when it was $4 or $5 or $3, they can make a lot of money. So Domino's Pizza is not a technology stock. It is not a drug store company, but it makes the people, they like it and they buy it because the people, they just buy what they like. Okay? Like Google, like Amazon, like some other kind of stocks, they like it. So when they like, people when they like, they don't have a reason. They just buy. What is the difference between Domino's and Pizza Hut or any other, or McDonald's or whatever? What's the difference? Okay? It's just people, they like it. So you say, Papito said, when was Domino's added to the market? I think, according to here, it's 2004. But 2004, Apple, let me see Apple. Apple was 39 cents in 84. it goes to 700 and then we have split, and now it is 191. Okay, so also Apple, you can see $1 here. What is it? 26 cents in 85. Okay, so it was only 26 cents. If you bought $1,000, $2,000, $3,000, $3,000, you will become millionaire right now. Okay, but understand, like when you see Apple here, see Apple here, 26 cents in 1985. 39, $1, 26 cents is in 85. Okay, but understand that Apple goes to, in some years it goes to 700 and goes down, and then so you see it's a lot of trouble. But understand Papito and Trump, that we have too many stocks. You can't see everything in the market. But the good thing is that when you see something good according to you, you just buy it, and you should wait many years. And you should not be scared to lose, because all the people who can't make a decision, they hate to lose money. It means they don't want to risk money. And this is one of the biggest problems that face investors and traders. They don't want to risk, they want a sure thing. So even in investing, there is no sure thing. You can buy a company, it was good, but later it will be bad and you lose money. Okay? Now another Papito said the stock exchange. Now you mean stock exchange, you mean the indexes, the major indexes. Let's see the major indexes. Let's see here. Let's see the okay. So oh no, okay, let's see the daily today. So today is a bad day in the market. 5.48, it means 1.92, and Russell 3.64, it is too much. Dow Jones 1.78. Now this is not a sell-off. Okay, it's not a sell-off, because a sell-off it should be a lot. Okay, so it's not a sell-off now. Okay, a Cloud Twitter account said, is mutual funds buying restaurant stocks now? Because I see DRA, SMG, McDonald's going to the roof. I have no idea. And listen, almost the big stocks are owned by mutual funds. So it's not they are bought. But if there is an interest more and more, yes. But I don't know. Let's see these stocks. DRI. No, there is DRI. As you can see, there is a gap up. This gap up, it means there is earnings. It has nothing to do with to the roof. Where is the roof? You see the roof. It's just a gap up. Okay? And you say CMG. No, CMG, it has a very long trend. But from 26 December, this is normal. This is normal for a lot of stocks, not just restaurant stocks. And then MCD, McDonald's. No, McDonald's is not doing that good. Is not. So, you know, stocks, when they go up, it means there is an interest. This interest could be anyone. It could be some analysts, they say good about some companies, or it could be mutual funds, it could be TV guru, it could be anyone. Okay? And as I showed you right now, it's from 26 December. Almost all the stocks have been going up from 26 December. I have told you this many times. From the first week of end of December, I told you that there is a reverse. If you go, especially Cloud with Twitter account and Trump, if you go to my live streams, the end of December and all the weeks until now, each live stream I say the stock market is strong and I show the chart each week. So when I say it's strong, it means there is a possibility to buy. There is only 1 week, I say 1 week, and I said that the stock market is weak. And I showed you this week 2 weeks ago or 3 weeks ago. That's it. Okay? So when I say to you something, when I describe something, it is what I think at that time. And when things continue, this means that there is a big interest of the whole investors community to buy. That's why the whole market goes up. And I have showed you many times this thing. Wiseman said, I follow you, Karim. I just wanted to hear your thoughts on what he said. I don't trust anything on TV. Now, TV mislead people. Because understand TV, when sometimes they say to you some facts about the past, this is true. But they want you to buy something in the future, which is false. Okay? So I have explained this last time. But let me just explain it again. Okay? Let's just explain it again. Just to make sure you understand. Okay. Now, let's say in TV, one day, let's say today, one analyst who is very famous, and he began to speak about a mutual fund. Let's say it is called expert fund. Just the name of the fund. XYZO. This is the ticker. This is the symbol of this index. Here, this mutual fund has done 87%, which is too much. Okay? While all the other mutual funds, they do, for example, 30% or 10%, but this one has done 87%. Now, what does it mean, this 85%? This is a fact. This is something true about last year, about 2018, for example. Now, this year is 2019. Do you think that this will do the same next year? No. It can do the same, it can do lower, it can do more, or it can lose money, depending on the stocks that are in. Maybe all the stocks are going up, and this year, 2019, they go down. Okay? So, analysts always speak about the past and they give you the fact. This is true. But when they say to you, buy, this is the false thing, because they try to influence you, because last year they got good. It means that this year you will get good. And you become to buy a lot of money on this mutual fund. And this year it says -10 2019. To always to take your decision. Don't follow anyone about the past. Because the past is something, it is past. It never comes back again. We are looking for the future. For example, I will explain to you when I was explaining about the market. Dow Jones was going down until the 26th December and it goes up. Now each week, for me, I say here, all these weeks, for example, about 10 weeks, each week you go to my channel, you go to my live, and I say the market is strong. I'm speaking about the future. Why? Because I see the trend very strong. So here, what I am saying is you can make money because of the trend that I am explaining. Okay? Now, when I said that the market is collapsing, here you should short the whole market. There is no way you go long because the whole market is going down. So this is how you make money. You make money when you prospect in the future according to your techniques, according to where you trade, and then you see some money in the future because of the trend. Okay? So each mood of the market has its own strategies. If the market is going down, you should short sell the stocks. There is no other way. You should never go long when the stocks are going down. This is foolish things to do. You are against the trend. Okay? So this is just the idea to show you what's going on into the market. Now let's continue. Papito said long $560. You bought it at $560. Now, Papito, you bought the stock at $5.60. Now it is $5.08. What is your stop loss? How much you lost right now? Do you have an idea about risk? How much you risk in a trade? Or you just buy and leave? And you ask me, can I hold for more? I don't understand. You should make the plan before you do the trade, where you should exit because you are losing too much money. What if the stock goes to 4, to 3, to 2? Are you still going to hold? So if you don't have a plan, you are not going to trade like this. And you see that the stock, when you bought it at 560, you see that the stock is going down for long. It's in a downtrend. I just explained this right now with Dow Jones. When there is a downtrend, you should never go long. Except for penny stocks. Sometimes penny stocks when they are going up, or IPOs. But you see the downtrend and you go against the trend. It means people are selling and you are the smart boy. You are buying from them. Now, when you buy, who will buy from who will buy like you? You are the few guys who are buying and you are losing a lot of money. So, Papito, you should make a plan. You should see how much you lost. How much the percentage. Are you okay to stay or not? If you want to stay and lose more money, if the stock goes down, it's your problem. But you should think about this before you buy the stock. When you buy, you should know what is your risk to exit the trade. You don't just buy and leave and hold. This is for investing. When you invest for good companies. This is a new company. How can you invest in a new company and it is losing money? And you see it is a downtrend. Okay? Andrew Trapman. Hey, good day, Andrew. Thank you very much for coming. Oral Pronobis, thank you for coming. Yes, Oral Pronobis, a lot of guys here. They have shorted Nike. Microsoft also, I didn't see Microsoft, but a lot of guys have been shorting today. Muddy Dirt, do you use a stock screener? Yes. Yes, to find stocks, I should use a stock screener using my criteria. Okay? And I can use my techniques for a portfolio I put, and I wait when the stocks are ready. I buy them according to the criteria. Okay, because when stocks are going down and then they go up again, I need other techniques. But when the stocks are going up, I need other kind of techniques. Okay, so you can Muddy Dirt, you can check. You can check. My first training is for free. You can go and you can see how I trade in general. Just go there and check. My first training is for free. Okay? If you have questions, just send me an email. Okay? Oral probably said, in a correction or bear market, traders must learn to short either inverse ETFs, stocks, or puts email. Yes. Now you should do anything that makes you money if the market is going down. Sometimes we have stocks that are going down because they lose business. Those stocks are good for selling short or for buying puts. Okay? Which is very, very good to do. It means in each mood of the stock or the stock market in general or the index, you should use respective techniques. If there is a downtrend, you should sell short or buy ETFs or buy puts options. Okay? Whatever it is good for you and whatever it is easy for you. If the stock market is going up, you should buy long, whatever you want. Duna said, I love the freedom of the market. Yes, the market is free, and everybody, you can buy whatever you want, you can sell whatever you want. No one cares about what you do. If you are making money, it is for you. If you are losing for money, you have lost money, and the other people, they take your money, and that's it. Okay? Cheaper C said, not all stocks go down in a bear market. Yes, but most of them, they go down. You can check, for example, 2008 and see if there are some stocks that go up. You can find just few. You don't find that much. Most of the stocks lost 50%. Andrew said, react to the reaction. Yes, it means in general you should just sometimes a day you find a stock that it is going up and it is excellent, and you find another stock going down. So it is just where you are and how are you going to search for this kind of stocks. If you are a day trader, people, they use selling short a lot because there are a lot of opportunities each day. You can find opportunities to sell short, and there are a lot of opportunities to go long also. Okay, so it depends what you want to do. It's 9:40. Trump said, how about Domo? I bought at 43.95. $43. So this is Domo. Now look, I think we have seen this stock before because I put the line. I don't know where I saw this stock, but this stock is an IPO. It means a new stock, and you see here it goes until $13 in November 2018, and from $14 it goes to 43. So in just few months, in November, so it means December, January, February, March, 4 months. Okay, it's like 300, most of the time 350%. Now, you bought it at this high. Listen, for me, I give you an advice. Don't buy at the beginning of the day when you are beginning, I guess, on the beginning of the day. That's why you bought at the high. It means it's the beginning of the day, I guess. Let's take which day is this? It is 19. Yes, you have bought around lunchtime, around 12:15 to 12:30. You have bought your stock. So you bought it at the highest. So the stock was begin 43. And you waited until the end, until the midday, and then you bought it, and then it goes down, it goes down, it goes down, 43, 33. So you see where you bought. There is the gap up. So let's say here, listen, for me, Trump, I have a technique where to buy. You buy late. Now when you buy late and the stock goes down, you see that you are losing money. If you buy on time, right now you may be having some money, not big money, but at least you are better than when you bought. Because for us, or for my subscribers or whatever, we buy on momentum. Momentum is very specific day where we buy. We don't buy at just any day because it is good. We have some criteria that you should use in the stock, okay? Duna said, what happened to GS today? GS. Goldman Sachs. But nothing happened. What did happen? Hey, Duna, what did happen today? Nothing. Stocks has been going down a little bit. What's going on? It's like the market. It's like Dow Jones. Here it goes $2. So, for example, Russell has gone $3.64%. 3.64%. Okay, so and here it goes 2.89%. Okay, $5.62. So I don't know what's going on, and I don't see the news that much. So you can check here, Duna. You can check the news. Goldman Sachs traded in a range yesterday that spanned from a low of 1. Yesterday the share fell 3, which took the trading range between volume time after. In the past 52 weeks, Goldman Sachs share price have been bragged is tracking the current trade status of Goldman. Okay, it's just, you know, they talk too much, they say nothing. So that's why I don't read that much what they say. Now, Trump, you said, I bought at the end of the day on Tuesday. Listen, Trump, I just showed you where you bought, and you told me at the end of the day, you bought here. I gave you, by 15 minutes, I will show you where you bought. You bought around from 12:15 to 12:30. Okay? So you did not buy at the end of the day. End of the day, it means 3 o'clock, 3:30, 3:45. So for example, let's say here, if you bought at the end of the day, oh yeah, yes. What's this? The end of the day is 43.96. Oh, okay. Maybe you say 44 or 43. Oh, I am sorry. You said 43 or 44? Oh, I'm sorry, Trump. You are right. I'm wrong. Now, because for me, I thought it was 44 and it is 43. So, yes, you are right. You are right when I say you bought it in the mid of the day. You bought it at the end of the day. But still, my my concern is not only that day. My concern is that I'm speaking about the day you bought. You are late. Okay? So when we buy, we have certain criteria to buy. We don't just buy because of any day. Okay? So this is what I want to tell. But you are right for the day when you bought at the end of the day, which is very good. But the day is wrong. So you see that? The day is wrong. This is what I am saying. Tuesday is wrong. Now, Duna said losing money is not too bad. However, how much you lose when you lose versus how much you win when you win. Well, what does it mean? What does it mean how much you lose versus how much you win when you win and when you lose? You complicate things, and it's like a bit of philosophy here. Duna, stop doing philosophy. Although I drink my coffee, but I can think more. The deal is, Duna, you should make a plan on each day. You should not exceed that loss according to your trade. Not according to your account, according to your trade, because there is a mistake when the people, they say they use the account risk with trade risk. Trade risk is different from account risk. Okay? It's not okay to lose too much in your account versus to your trade. So you should specify how much you can lose, because when you enter, if it doesn't work, you should exit. You should not give the market too much money, because the market is saying to you, you are wrong. Why you stay more? Now, if you stay more and you don't have a specific stop loss, what you should do, you continue to hold a loser. Now, if you are a day trader and you make $200 and you lose $200 in another trade, how can you make money at the end of the year? You will never make money. So you should reduce very much your losses. Reduce them. You have the ability to calculate how much you want to risk in each trade. It's not the market who decides this. It is you who decide how much you want to lose, depending on the stock volatility, depending on how many shares you bought, depending on how big is your position. Okay? And it's better that you have similar positions. You don't buy 50% of your account one stock, and the other day you buy 10%, and the other you buy 100%. This is not a good way to do trades. You should make them equal. And then you should specify how much you want to risk. And then if we have good trades, you will see that you are making money. Okay? So that's the thing that you should look for. VIX perking up, UVXY up today. Okay. Duna teacher, can you please explain the VIX? I don't understand the VIX. For me, listen. For me, I don't use the VIX, and I don't teach the VIX, and I am not interested to teach the VIX. Listen, try to focus on your stock volatility. Don't try to see other things. Okay? Maybe I will do a video about this in the future if you are interested, but I don't teach these kind of things. Okay? So Orna probably said when the VIX is over 20, much volatility. Listen, the volatility, you see it through the volume. The volume can change at any time. So the VIX will not help you. Okay? It will never help you. So focus, and even the volume is so high or so low, it doesn't mean nothing for the price. Sometimes low volume and the price is going so good. Sometimes we have a high volume and the stock is going down. So volume, high or low, doesn't explain nothing. So you should focus on the price only. Don't ignore anything else. Now, when you see a stock that has a high volume, it means there is a lot of activity and it is good to go up or go down very quick. So this is how volume is so interesting. But the volume doesn't tell you the direction. Listen, Duna, I have made a video 43 minutes about the volume. Just check it 1 week or 2 weeks ago. I have made a video about volume. Please go to it, have time and watch all the video, and then you can send me an email and we can discuss this. Okay? Okay. A cheaper C said, Trump is right and you are wrong. It's the end of the world. Oh, yeah. It's the end of the world. That's good. Okay. It's the end of the world. There is a interruption in the video. I see it. Okay. So let's continue. Cheaper C, it says it's the end of the world or Trump or whatever. No problem. Muddy Dirt say, is there a certain percentage you set your stop loss at? Listen, Muddy Dirt. There is a training about how to use a stop loss, to calculate it. There is no percentage. Okay? It depends on the stock, it depends on your risk, it depends on the stock risk, it depends on many things. So either you can take the training, it's called the training level 6, how to calculate stop loss, or you can go to golden subscription you subscribe and then you find 13 training for free. Okay, so you can get to the golden subscription and you got okay, and you got 13 training for free, and then you find training level 6, and this is where you study stop loss and you study how to follow the trend, you study everything. Now, Clown Twitter account said what you are saying. Domo broke 73.20 and hold. It's just considering to move higher. Okay. If you think that, it's good. I didn't say nothing about the stock. You can stay and hold wherever you want. Trump 3 is buying breakouts after earnings. Yes. Oren probably said some stocks show relative strength during corrections. Yes. Yes. Now, correction is just some people who are selling, who are scared. Now, when they sell, other people, most of the time, people, they come to buy. If there is enough buying, enough demand, the stock will go up. If there is no, the stock will collapse and it goes to a downtrend. That is the deal. Okay? That is the deal for the correction in the trend. You understand that Oran Prenobis and Clown and Trump, that these things I teach. To follow the trend, there are something that you should look, specific things that shows you where the trend will be going. Okay? Now, if you have an idea how the trend moves, it's okay. And if you are making money from that, you continue what you are doing. Okay? So you don't need my opinion or my teaching. So it's up to you. Now, right now it is 2 hours of live, and I have changed from 8 to 10 just to see if there is enough people that can come, and we can it could be better and beneficial for many people. Now, we will see next week if we can keep this 8 or put it 9 or put it 11, whatever hour, because we will see more people. Now, Oran Prenobis said, do you think stock buybacks can artificially inflate a company's evaluation? No, listen. So there are a lot of companies, they buy more of its stock, but understand there are rules. It can't buy more than what is expected to buy. You understand? There are rules. Stock market, the company, when it is private and it goes IPOs, they give strict rules on how many percentage it should have and how many percentage it should be public for mutual funds, for the people. So the company can't go and just buy more and more, because it will become private. It will not let people buy, and this is not the true thing about the company. Okay? And I don't think that there is a change, because go to see the insider trading. Some people they buy, some people they sell. It depends on them. But if a lot of insiders are selling, sometimes they know something bad, and some mutual fund, they investigate if they are selling because there is something wrong with the company, or it's just because of them. Because an insider, an executive, he has millions of shares, for example. He wants to sell because he needs money. He wants to buy a house. He wants to go to a vacation. Whatever money he needs, so he can sell. He is free to sell. No one will stop him from selling. This doesn't mean that the company is going bad. Okay? Cheaper said, VIX, also known as the fear factor, VIX up, market down, market up, VIX down. That is in a nutshell. Traders, investors use as a hedge too. Okay, thank you very much, Cheaper, for this information. For me, I have never seen this VIX. I have never traded VIX. I don't care what this VIX do, and I don't care what is the volatility and volume do. I don't trade them. I am out of all these garbage things. So if the people, they use them, it's okay. If they can make money from them, it's a good thing. Thank you very much, Cheaper. Duna said 8 p.m. is a great time. Oh, you are going to sleep early, okay? That's a good thing. Now I will try just to see if 8 o'clock is better for you guys. Next week, if God wills, I can make it at 8 o'clock, and it will be very good for you guys. But for me, it doesn't matter. 8 or 10 or 9 or 11, I am just free. I can do it at any time. And thank you very much. Yes, 8 o'clock. Thank you very much, Orna Probis. Trump, he say hi. What do you mean he say hi? You are with us all the time. Trump, are you just wake up or what? Why you say hi? So, guys, we try to stop this at 2 hours as usual. And thank you very much for coming. And I will make some changes to my subscription. Could you unlock Nasdaq? Nasdaq SE. He's our friend. Who is this? Who is this Nasdaq? Trump. Who is this Nasdaq SE? I don't know who is he. He is in the chat. I have no idea. Could you unblock and Nasdaq and see? He is a follower. But how can I unblock him? I don't know. I don't know where he is or who blocks him. I don't see any. I see Duna, Muddy Dirt, Oral Probis, Trump, and Wiseman. Participants. I don't see this guy, Nasdaq SE. And where? Is it in YouTube? I have no idea. You can send me an email. I have no idea about this. So, guys, thank you very much for coming. He made a comment in your channel and block him. I have no, I don't remember. But if someone, listen, if someone is advertising or someone is using bad words, I don't tolerate that because it is my channel. He can open his channel and he speak whatever he wants. But I don't know. I don't know. Maybe send me his channel by email and I can see that. I don't know. It's a lot. Maybe I don't know because I don't usually ban people from my channel except if they are saying bad things or they are advertising or something like that. Okay. So send me his YouTube ID and I will see. I don't know. And why he doesn't send me an email? Okay, he can send me an email and explain what he did because I don't know. Okay, so what does he want? He wants to comment again in my channel, or what does he want? Because he can watch my channel without anything. I don't understand. So thank you very much for watching, and please see you next time, next Friday. And I have been making a lot of changes in my subscriptions. If you go to my website, you find these subscriptions changes. I want to make I want to make a portfolio of stocks and portfolio of ETFs, and I give alerts when things are good for these stocks. And this is the new thing about my subscriptions. Okay. Oh, he wants to participate in live. Okay. Send me his ID, and I will see. Thank you very much, Duna, Tramp, and Cheaper, Wiseman, and all the guys that I forgot. Thank you very much, and see you next time. You can check my website and check the new things that I put. Okay, you can check my website for the new things that I put in the subscriptions for the following weeks. Thank you very much. Oh, thank you very much, Nastunalochi. You are always sleeping, and then at the end of the session you wake up, or you are always silent. No problem. Okay, thank you very much, and see you